barrel. Let's get a little bit more. Peter McGuire joins now from the Sydney CBD studio from XM. Peter, appreciate your time today. What's driving oil at the moment? What are you seeing as the major factors?
Well, good afternoon, James. We had a nice little bounce today, considering all the other mayhem on the market.
Yeah.
Up around about 0.5%. I think it was probably just oversold. We really hit pretty hard over the last, 4 to 5 trading sessions, and it was just a nice little bounce. Now, it's up 45, 46 cents, and the more important thing was that, according to sources, OPEC and non-OPEC producers, a special committee was put together. They've come up and they're saying that they're possibly going to roll an extension of those cuts forward for an additional 6 months. But we're still only a month away from the 172nd meeting in Vienna on the 25th of May, James.
That meeting might come to that, Peter, but the issue is you've got the US shale producers really amping up their production, and when that process continues, or if that process continues, surely that's going to put OPEC under the proverbial pump even more?
Well, exactly right. I mean, when you think about it, it's been a dramatic year. Considering where that crude market and the shale production, they're up nearly 10%. They're at 9.25 million barrels a day, the US, nearly knocking on Saudi Arabia's door, and they're the #1 oil exporter as far as OPEC's concerned. So as those shale production and the rig count increases week on week, we've just had 14 consecutive weeks of increase in production and increase in rig count. So in turn, the next path it's going to be, it'll probably take the mantle as the #1 producer, I'd say within a year, year and a half. So it'll be a race to the top against Russia and, of course, Saudi Arabia.
Tony Farnham again. The issue then, do the Saudis keep pushing the production cuts? Because aren't they cutting off their nose to spite their face then, in terms of the amount of money they're getting? Which is important, because they're not as if their budget situation improving in any way, shape or form.
Well, no, exactly right, Tony. But the other side of it, of course, is the overhang, and we all understand that they need to cut those numbers to try and ease that 1.8 million barrel per day overhang. The other thought, of course, is that you're not too far away from the largest IPO in history, being Saudi Aramco. So naturally, they need to see a higher oil price, or would certainly like it. But there is a race on now with the crude coming forward as far as what's going on with non-OPEC producers and, of course, with the US. So, Tony, it's going to be a very interesting Northern Hemisphere summer.
Peter, Scott Phillips here from the Motley Fool. Mate, you almost sounds like a dressing up process, getting Saudi Aramco ready for sale. Does it portend a slump thereafter? How much can or is being done to get this away that may have to be borrowing from tomorrow to justify today? Well,
Scott, a couple of things, and you've been in the game for many, many years. There's a couple of very interesting points as far as valuation. I've seen valuations coming in at $400 billion, $500 billion. I think that was Wood & Mackenzie's, all the way forward to $2 trillion.
Jesus.
So there's a lot of volatility in pricing, and then you take on board how much are they wanting to sell. Tony mentioned earlier as far as budget issues with Saudi Arabia, and that's the whole reasoning of putting that float together. So there's going to be a lot of pressure, I think, on the Saudis over the next 6 to 12 months, and that really is going to be a fascinating play where it's going to be listed. Will it be London or New York or somewhere in Asia, or a combination of all? So, yeah, that's it's going to be one fascinating IPO.
Can we turn our attention, get your thoughts on gold, looking at the precious metals? We were speaking to Gary Burton from IG. He's looking at the technical, suggesting at the moment the bull run, if you like, is still very much in place. And if all things go to plan, though they rarely do, 1,400 he thinks potentially for the gold price.
Well, yeah, James. I mean, just think of what's happened in this today. I mean, there was all the risk is back on. There's talk, Macron's going to walk it in. It's too early to call, but when you're thinking of where Le Pen was, there was a lot of uncertainty. Gold got hit down around about 1.3, 1.4%. We saw 1266 handle. It's back at about 1270, I think 1272 in Asia now. I just left the screen. There's the most important thing that I've seen in the last couple of days is those hedge funds really rallying forward. Volatility was down to nearly October 2014 levels, 60-day historical. That was last Friday. So there's a lot of momentum. I think that was probably just going to be a washout today. And I'm agreeing, you're probably going to see a plus 1,300 handle either sometime later this week or early next week. You've got the Euro ministers talking on Thursday, James, and you've got the Fed talking next week. So I don't think you're going to see a rate rise, and I think that's going to underpin gold prices.
Well, I wanted to get your thoughts. I mean, it wears so many different hats. If the level of geopolitical risk hasn't driven it to 1,300, I mean, what do you think's likely to do it?
Well, I think that that easing as far as that US dollar, it's down now at November 2016 numbers. There's been softness there. There's also, if the Fed doesn't raise rates next week, James, which I don't think they will, then you're going to see a further uptick. I think that'll force a little bit softer as far as that US dollar play, and it'll force the traders to really probably add and stack positions for gold. And I think that when you're looking at open interest on COMEX, there's been a big uptick and a big surge as far as open interest.
Peter, Tony Farnham here from Patterson's again. So we've got the Fed not doing anything. The next issue, though, is what's going to happen to the US dollar. US dollar movement is also a factor that drives gold. And then we've got a Trump tax plan coming through. How are all those three things going to come through and impact the precious metal?
Well, Tony, first off, I don't think you're going to see that rate rise, as we mentioned, next week. Secondly, there's still uncertainty. Macron and then leading into Le Pen. What happens later in the year with the German elections in September? So over that Northern Hemisphere summer, you've got that weakness as far as US dollar. You'll have that carry forward with hedge funds and money managers stacking positions. They'll push it up, I think, from here. And then the next side is what happens with Trump and his tax. He's got his hands full at the moment. It'll be interesting how that interplays into the market over the next 4 to 6 weeks. Everyone's sitting and waiting, so it's just a little bit of a wait-and-see approach.
All right, Peter McGuire, brilliant as always to have you on board. Thank you.